Beef Market Update with Ann Wasco on RealAgriculture.com is brought to you by Haney Farms. Sean Haney here with RealAgriculture.com for another episode of the Beef Market Update with our great friend of Real Agriculture, Ann Wasco of Gateway Livestock Exchange. How are you doing today, Ann?
I'm good, Sean. How are you?
I'm doing pretty good. You enjoying the sunny weather out there? This is like spring.
Oh, what a mild start to March. Yes.
What does that mean for is March the month where we do the in like a lion, out like a lamb, or the
inverse? Now, if you remember last Monday, the 29th of February, it was kind of snowing and stuff. So I'm going to go with it came in like a lion, and we're going to go out like lamb, I hope.
Wishful thinking. Okay, big news. Lots of numbers to crunch here. StatsCan last week came out with the inventory report for cattle. What did it tell us?
Well, Sean, this is the report we get twice a year. It's called the biannual Canadian Cattle Inventory Report. So it kind of gives us a snapshot of all classes of cattle across the country on January 1st, and then we'll get the next one in the summer for July 1st. And a few weeks ago, we were talking about the U.S. reports that USDA had released and how aggressive the expansion in the U.S. cow herd and the beef cow herd was south of the border. So we were all kind of waiting. I think there's lots of signs and signals as we go through the year that we can surmise what might be reflected in this report, but now we've got the actual data. So to no surprise, very little change in the national cattle herd here in Canada. Total cattle and calves, 0.3% increase. So now we're at 11.6 million head nationally versus last year at this time we were 11.92. So just a small increase. Now focusing more on the beef cow side to see what's going on there. No change at all nationally in the beef cow herd, 3.83 million head. And again, if we were looking for any signal for expansion out of this report, it didn't show us a whole bunch. There's a few things that showed us some numbers are growing, but cow numbers not. Now, this was the first year we didn't see a decline in the cow herd since 2006. So, maybe that's something in and of itself. But again, we saw very small cow slaughter and cow exports for slaughter last year, and so that does make sense. Just kind of to finish up on that beef cow part of the story, Alberta numbers were basically up 1% for beef cows compared to a year ago. Saskatchewan saw no change. BC saw a 2% increase, and Manitoba actually saw a 1% decrease. So that's kind of how the beef cow numbers looked. But the story, I guess, is more in the replacement heifers.
We shouldn't be surprised, though. Like, this is kind of a sort of a story that lacks inspiration, but we're really not surprised, are we?
Well, I think it's a story of a lack of equity and the decade prior to 2014 really telling the tale, the differences between the U.S. cattle herd and the Canadian cattle herd, or specifically the producers and the positions they were in to take on or not take on expansion. So, digging deeper, there are some signals and some signs, and I think anecdotally across the country I would agree with this. Beef heifers for replacement did finally see a 4% increase on this report, so 547,000 head. It's about a 21,000 head increase from last year, so nothing spectacular in numbers, but again, it is an increase. If all those heifers stay in the herd for next year, it will amount to less than 0.5% increase in the beef cow herd for 2017. So there's going to be some growth, but wow, it's going to be, very small and minute vis-a-vis our American friends that we're talking about a 4% increase in the beef cow herd down there this year.
Yeah, and when you look at total numbers of cows in the U.S., that 4% increase is huge.
Well, yeah, right off the bat, they've gone from, a bottom in 2014 of 29 million to 30.3 when they start this year. So you can see what they've already increased in their cow herd, and we, pretty well can expect their cow herd numbers to be larger again next year because of what they've done with replacement heifers this year. So certainly their increase is going to overshadow the lack of increase here in Canada.
Well, but with how much some people have lost, from an equity position, the U.S. has not exactly had a they've had this kind of the same unhealthy market. Why is the U.S. any different?
Well, no, Sean, I'll have to differ with you on that. If you look at margins at the cow-calf level. So that's the factory we're talking about. We're not talking about the feedlots here. We're talking about the cow-calf level. And really, if you go back and look at even the decade, right back to the late 1990s, the U.S. cowman, on average, has had not a bad go of it. Not all windfall years like we saw in 2014 and 2015, which were the highest ever for P&Ls for both U.S. and Canada at the cow-calf level. But even before that, certainly in better shape. So once they got past the drought of 2011, 2012, the situation certainly fiscally was considerably better. So I do think there was a significant difference on that front.
So do you think we're getting too comfortable with this flat line? Where do we go from here? Is it concerning long term if the U.S. continues to increase the herd size and we stay flat? Does it matter?
Well, it's all about timing. So now it's going to be economics and cattle prices that drive the decisions going forward. So, and Mother Nature obviously is going to play into that. She always does somewhere. But bottom line is the cattle price cycle, and I've talked about this at lots of meetings this winter. The cattle price cycle is obviously following the U.S. herd cycle. So our numbers are coming certainly in a growth phase, and our cattle prices are coming down. So I think one has to be very cognizant of that as they think about what they're doing with their individual herds. If we're heading into the next phase of the cattle cycle, which means lower prices ahead over the next several years, I think one has to be certainly mindful of that as they make their plans. Well, certainly there'll be another cattle cycle to take advantage of, but here in Canada, I think we've not going to be looking at this at all the same kind of expansion we've seen south of the border, and for this one.
Well, that explanation sounds very normal. I was hoping you're going to give more of like an exciting answer, like it's Justin Trudeau's fault.
Okay. Well, we'll let 60 Minutes do that one.
and what else is going on in the market right now that producers, whether you're ranching or you are backgrounding or in a feed yard finishing, what are guys thinking about right now?
Well, on the finishing side, it's been a tough, ugly winter. As you kind of alluded to, margins have been just plain old ugly since last fall. And, the worst, if you were just on the spot market, was probably December, but it's still not fun today. I think as we get out towards summertime, margins will hopefully improve simply because the cattle feeder's been able to get his buy in line better with this lower trending market. If those listeners are on the backgrounding side, certainly this first quarter has been a struggle for feeder cattle prices. That's pretty typical seasonally. So if that's the case, once we get kind of March out of the way, then normally this replacement the feeder market starts to improve as we head out into the summer and later summer. Calf market, same thing. As the grass turns green, usually these later calves will strengthen in price, and I think assuming moisture comes, that should be the case again. So we've got different things going on in the short term market, but again, they're all pretty typical of what seasonally happens in the first quarter of any year.
So everything's normal.
Well, normal as normal can be. Let's put it that way.
When I talk to some of our listeners about feed yard losses, I really hope this isn't. I hate that new normal, but it has been a very, very emotionally and financially taxing year. Yeah,
it's difficult, Sean. When margins were so good there through late 13 and 14 and even early 15. It's unfortunate, but unfortunately pretty typical that a lot of that margin gets given back, and that's exactly the process we've gone through. So the cattle feeder will have his day again, but again, this has been as you say, a real tough winter for sure.
Yeah, and this is kind of a dark, dreary question, but is there much talk out there in the market about, we had this a number of years ago where a lot of talk about feed yards going dark?
Certainly haven't heard that yet. So no, I certainly haven't heard that, Sean.
Well, good. That means things are going to get brighter here as we move into the rest of 60. I'm glad I want to end on that good note. Thank you.
Let's go with that. And then the other thing is, of course, the next time we talk, it's hopefully, the weather continues to improve, especially on the East Coast where our consumers are. they pull those barbecues out and get some beef grilling back again and get a spark in our demand side of our market, which normally happens as we head into that second quarter. So that's the next thing we're going to look forward to in our next discussion.
Well, we should do our part by doing the next beef market update on a patio while we're barbecuing and sipping on a cold one.
I'll be there.
Okay, cheers, Ann. Have a great week, and we'll chat with you again soon.
Okay, thanks, Sean.